Welcome back to Investing Talk Podcast.
Good to be here.
Today we're taking a closer look at advanced micro devices.
Yes, AMD. We've got their 2024 annual report, the latest Q1 2025 financials from an 8K filed May 6th.
And also an analyst report. This one's from DBS Bank, dated May 15th, 2025. So quite current perspectives.
Different angles.
So our goal here is to really unpack all of this. We'll look at the key performance indicators, the strategy, growth areas, challenges, essentially help you get well-informed on AMD fast.
Let's do it.
Okay, maybe a quick bit of background first. AMD started way back 1969, Silicon Valley startup.
Classic story. And now a global company. The report mentions about 28,000 employees as of late December 2024.
And it seems they're getting noticed for more than just their tech lately. The annual report highlights quite a bit of recognition.
It does. Things like Forbes' World's Best Employers, Fortune's Most Admired Companies, Time 100 Most Influential.
That's quite a list.
And it goes on America's Most Just Companies, Newsweek's Greenest Companies for 2025, EcoVadis Gold Medal for Sustainability, 100 Best Corporate Citizens. It suggests, a focus beyond just the products.
It really does paint a picture of corporate culture being important. They talk about innovation, diversity, belonging, inclusion efforts.
EARCH, Advancing Women in Technology Initiatives. They even mention an employee survey, the AMD survey, putting them in the top 10% of high-tech firms for engagement.
Executive roundtables, too. Seems like they're really trying to build that internal strength.
Yeah, foundation matters, especially in such a competitive field.
So speaking of the field, let's talk products. AMD's portfolio is, well, it's broad now.
It really is. Much more diverse than years ago. You've got semi-custom SoCs, that's system on a chip, adaptive SoCs, APUs, client devices, embedded systems, servers. The works.
They seem to break it down into key segments, right? Data center, client.
Data center, client, gaming, and embedded. Four main pillars.
And that data center segment feels particularly crucial right now.
Absolutely. Especially with AI booming. That's where you find their Instinct AI accelerators, the EPYC server CPUs, GPUs, DPUs, data processing units.
What do those DPUs handle?
They help offload tasks like networking, security, storage from the main CPU. Also smart NANDs, FPGAs, all the stuff powering data centers, supercomputers, cloud, AML workloads.
Then there's the client-side desktops, notebooks.
Right, CPUs, APUs, chipsets. Focus there is on performance, efficiency, and increasingly AI. They actually note being the first to integrate a dedicated NPU, a neural processing unit, onto an x86 chip for AI PCs.
Interesting. And gaming. Still a big part.
Definitely. Discrete GPUs plus the semi-custom chips that go into PCs, game consoles, cloud gaming platforms.
Okay, and the last one was embedded.
CPUs, APUs, FPGAs, system on modules, adaptive SoCs. These go into cars, industrial equipment, healthcare devices, networking gear, and often include AI processing too.
So a very wide reach across different computing needs.
A very wide reach.
All right, let's shift to the numbers. That Q1 2025 8K filing, what did it tell us financially? These are unaudited, right?
Correct. Unaudited Q1 numbers. So GAAP gross profit was $3.736 billion. That's a 50% margin.
Okay.
Non-GAAP gross profit was a bit higher, $3.992 billion, making the margin 54%.
And operating income.
GAAP operating income came in at $806 million, an 11% margin. The non-GAAP figure was quite a bit stronger, $1.779 billion, or a 24% margin.
Big difference there.
Yes, and the same pattern for net income. GAAP was $709 million, that's 0.44 cents per diluted share. Non-GAAP was $1.566 billion, or 0.96 per share.
And just to clarify for listeners, the 8K footnote explains that non-GAAP excludes certain items, right? Like stock compensation, acquisition costs.
Exactly. Amortization of acquisition-related intangibles, things like that. The company presents it this way because they feel it better reflects the core ongoing business performance.
Got it. Now, digging deeper into those Q1 numbers, the data center segment really stood out.
It absolutely did. Revenue there hit $3.7 billion. That's up 57% compared to Q1 the previous year.
Wow, 57% year over year. That's huge growth.
Huge. And the operating income for that segment, $932 million. Compare that to $541 million a year ago.
So nearly doubled the operating income. What's driving that?
The sources point primarily to sales of their EPYC server CPUs and, crucially, those Instinct GPUs, the AI accelerators. That's where a lot of the current demand is focused.
And the 8K mentioned some specific wins or developments there, too.
Yes, several. A partnership with Oracle for a big AI cluster using their MI355X accelerators and 5th-gen EPYC. Software updates with ROCm 6.4 to improve AI inferencing and training support.
Okay.
Core 42 in France is deploying Instinct GPUs broadly. There's a new open telecom AI platform partnership with Geo Platforms, Cisco, and Nokia. Siemens is using EPYC and Radeon PRO GPUs on Azure for automotive work.
So broad adoption across different sectors.
Seems like it. Plus, they confirmed the next-gen MI350 Instinct GPUs are on track for accelerated production by mid-2025. So, looking ahead as well.
Building on that momentum, there was also the ZT Systems acquisition. The 8K said that closed recently.
End of March, March 31st, 2025. The annual report reminds us the deal was announced back in August 2024 for around $4.9 billion in cash and stock.
And the purpose of that deal?
It's about bringing silicon, software, and systems design together. They want to deliver full, rack-scale AI solutions. The ZT design teams are now part of AMD's Data Center Solutions Group.
But they're looking to offload the manufacturing part.
That's what it says. They plan to seek a strategic partner to acquire ZT Systems' U.S.-based manufacturing business. So keep the design talent, potentially divest the physical production side of ZT.
Interesting strategic nuance there. And that deal impacted the share count outlook for Q2.
Yes, the 8K mentioned it added about 9 million shares to the diluted share count forecast.
Okay. Beyond acquisitions, intellectual property is obviously critical in semiconductors.
Foundational. As of end 2024, they had something like 7,500 U.S. patents, another 1,900 U.S. applications pending. Globally, around 18,800 patent matters.
That's a lot of IP.
It is. They also use cross-licensing deals, technology exchanges, and, importantly, they rely on third-party IP as well for new product development. Common practice, but it creates dependencies.
Which leads us nicely into the operational side, specifically manufacturing and the supply chain. They rely heavily on others, don't they?
Very heavily. It's a fabless or fab-lite model for the most advanced chips. They use TSMC for the leading-edge stuff, 7 nanometer and below. Global Foundries for some older nodes, also TSMC, UMC, Samsung for other ICs.
And that's just the wafer fabrication.
Right. Then there's assembly, test, mark, and pack ATMP, which also relies on partners.
And the annual report flags this reliance as a risk.
Definitely. They depend on a limited number of suppliers, not just for fabs, but for specific equipment, materials, substrates, memory, PCBs, capacitors. If any key supplier hits a snag capacity issues, quality problems, financial trouble, it can directly impact AMD's output.
And swapping suppliers isn't easy.
Not quickly, no. It's complex technology, qualification takes time. There's also risk around demand forecasting if they guess wrong. Especially if they've made prepayments, they could end up with excess inventory nobody wants.
Plus, the broader economy affects customers and suppliers, too.
Exactly. Customers might delay orders or struggle to pay. Suppliers might cut back production if things get tough. It's all interconnected.
Okay, let's bring in that external view. The DBS Bank report from mid-May, what was their take?
They rated AMD as a hold AD. Their 12-month price target was set at $105 US dollars.
A whole D rating, and they noted the market cap.
Yeah, around $186.4 billion US dollars as of the report date.
Did DBS provide sales forecasts?
They did. They showed the actual 2024 sales at $25.8 billion roughly. Then they forecast growth to about $31.5 billion for 2025, and then up to nearly $37 billion for 2026. So expecting continued top-line growth.
The report also had a stock performance chart.
It did. It showed AMD stock significantly outperforming the overall S&P 500 index between May 2021 and May 2025.
That sounds positive.
It is, but the same chart showed it lagging the S&P 500 semiconductors index over that same period.
Ah, okay. So doing well, but maybe not keeping pace with the absolute top tier of the semiconductor sector during that specific window.
That's one interpretation, yes. Context matters.
So looking forward from AMD's perspective, what's their outlook for Q2 2025? This is from the 8K again, the non-GAAP outlook.
Right. They're forecasting revenue around $7.4 billion, give or take $300 million.
Okay. And gross margin.
This was notable. They forecast non-GAAP gross margin at approximately 43%.
That seems lower than the Q1 non-GAAP margin of 54%.
It is, and they explain why. It includes an expected charge of about $800 million for inventory and related reserves.
Oh, okay. What's that charge related to?
It ties back to new U.S. government export controls, which they'd previously disclosed. The report clarifies that excluding this one-time charge, the non-GAAP gross margin would actually be around 54%, consistent with Q1.
So it's significant impact from those regulations into Q2. What about operating expenses?
Forecasted at approximately $2.3 billion non-GAAP.
Tax rate.
Around 13% effective tax rate on pre-tax income.
And the share count reflects the ZT deal.
Correct. Forecasted diluted share count is about 1.64 billion shares, which includes those 9 million from ZT Systems.
So managing the path forward means dealing with various risks. The annual report laid out quite a few.
Yes, it did. Competition is a big one. They specifically call out Intel in CPUs and NVIDIA in GPUs, mentioning their dominance and aggressive tactics.
The dependency on third parties came up again.
Repeatedly. For manufacturing, motherboards, software support like from Microsoft Memory, other components, even distributors, it's a web of dependencies.
What about operational risks?
Things like delays getting new products out the door, challenges getting designed into customer platforms, and being tied to the timing and success of those customer launches.
Makes sense. Economic uncertainty, too.
Always a factor, affecting demand, customer payments, supplier health.
And cybersecurity, that's everywhere now.
Big one. Potential disruption, data breaches IP, sensitive info leading to financial hits, reputation damage, especially with stricter privacy laws like GDPR and CCPAC-PRA.
Acquisition integration risk, like with ZT.
That's mentioned, and the risk of having to take impairment charges on assets from past deals, Xilinx, Pensando, Silo AI if they don't perform as expected.
Anything else stand out?
Risks related to international operations, political instability, and a specific mention of environmental liability for Superfund sites down in Sunnyvale, California.
Okay, quite a list of things to navigate. Let's look briefly at their financial position, overall cash and debt.
As of the end of 2024, their cash equivalents, and short-term investments stood at $5.1 billion. A decent cushion.
And debt levels.
Total debt was $1.8 billion at year-end 2024. That was actually down from $2.5 billion the year before. They paid off $750 million in senior notes in June 2024, so deleveraging somewhat.
What about returning capital to shareholders? Buybacks.
They have an authorized stock repurchase program up to $12 billion. At the end of 2024, there was still $4.7 billion left under that authorization.
Did they buy back much in 2024?
Under the program, they repurchased 5.9 million shares for $862 million. Separately, shares withheld for employee taxes on equity awards also count as repurchases. That was another 4.6 million shares in 2024.
Okay, so they are actively returning some capital.
Seems so.
So wrapping this up, we've seen this really strong story in the data center, clearly driven by AI demand. Strategic moves like ZT Systems fit into that.
Very strong momentum there.
But layered on top of that, you have these significant operational realities, the reliance on TSMC and others, intense competition, the various market risks we just discussed, plus specific things like those Q2 export control charges.
It's definitely a balancing act. High growth potential meets significant execution risk and external pressures.
Which leads to maybe the final thought for you, the listener, to ponder. Given these powerful AI tailwinds lifting the data center segment, but also facing these considerable dependencies, competitive pressures, and risks, how do you see AMD navigating this? How might that tension between the massive opportunity and the inherent risks shape its performance relative to, say, the broader semiconductor index or its main rivals going forward?
That's the key question, isn't it? Execution and navigating those headwinds will be critical.
Absolutely. Well, that concludes our look into advanced micro devices, drawing from their annual report, Q1 results, and that DBS analyst take. We hope the synthesis gave you a clearer view.
Hope it was useful.
Thanks for joining us on Investing Talk Podcast. If you found this valuable, please do subscribe, give us a like, and maybe drop a comment with your own perspective on AMD's future.
We'd love to hear your thoughts.